This is the Future of Finance.
This episode has been brought to you by Metis Global Partners. Hi, everyone. Welcome to the Future of Finance podcast. I'm George Dyer. I hope everybody's doing well. Today's show is a really interesting one. We're going to talk a lot about politics and political spending of companies, which is, I think, just a hugely important topic, in some ways kind of the defining topic of our times, at least in the U.S., and at the same time, kind of a really uncomfortable topic, at least for me, in a couple of ways. I mean, first, we just are living in such divisive times, particularly here in the U.S., and I just think these issues around sustainability and sustainable investing are so important to everyone that I, never want to alienate people from these conversations by talking politics. And at the same time, our work at the Intentional Endowments Network, really since we began working with endowments and investors 12 years ago, we've gone to great lengths again and again to emphasize that these issues around sustainability and sustainable investing are not about politics. They're about science and data and financial performance and fiduciary duty. And especially in the last 2 to 3 years, there's been this deliberate campaign to politicize ESG investing. And before that, to politicize some of the issues around climate change and extreme inequality and DEI and the like. So we've been kind of constantly reinforcing this case that these issues are critical to fiduciary duty as they represent systemic risks to investors. And that it's not about bringing personal politics to these decisions. And that kind of makes it difficult to talk about politics at all sometimes. But obviously, politics and policy is critical for business and investors and important to talk about. So I'm excited about this conversation today. We've got Brian Potts on the show. He is one of the founders of Goods Unite Us, which is an app that shows how executives and corporate PACs donate to political candidates, both how much they donate and how much of that goes to Democrats or Republicans. So people can use it. It started helping people inform their purchasing decisions if they want to align their spending with either party. But they've also leveraged this data to create an ETF called DEMZ, D-E-M-Z, which is composed of companies that give 75% or more to Democrats. They are also now going deeper to show how political spending aligns with how politicians vote on specific issues. They line them up with 18 issues like the environment, workers' rights, and gun control, other kind of key issues. So anyways, they're doing a ton of really interesting stuff that we get into. And Brian is just a great guy. He's super smart, funny. He's a lawyer, a serial entrepreneur. He's also got a new podcast that we talk about a little at the end called Give and Receive, which is excellent. And I think you should check out as well. And it was just great to talk to him and get to know him a little bit. So I hope you enjoy it as much as I did. Let me know what you think. And now here's Brian. Brian, how you doing? Welcome to the podcast.
Hey, thanks for having me. It's great to be here.
Yeah, it's really, really good to have you on. Great to connect. And I'm excited to dive in and share more about what you've created at Goods Unite Us. Just let's start there. Tell folks just a little bit about what Goods Unite Us is, the basic premise.
So Goods Unite Us was my wife and my brainchild we launched in 2017, actually.
Mm-hmm.
And it's a app and a website focused on exposing corporate money in politics. And what does that mean from a practical perspective? I'm sure you've got a lot of quants on here who would, want to know what the details. And the details are, and our methodology has been the same since about a year after launch, which is we look at only Federal Election Commission data, and we look at 3 federal election cycles. So we average it over 3, so you can't game the system, and et cetera, et cetera. And we look at only the executives in the company, so the C-suite, not the board, and the company PAC contributions. And we track it all the way to the candidates, and we aggregate that data and give you a snapshot. And so we've been doing that in the apps, which you can download for free since 2017. And it's so people can ideally shop according to their politics. Our mission is to get corporate money out of politics. Honestly, our mission is to get all money out of politics, or as much big donor money out of politics as possible on both sides. And we realized, my wife and I are lawyers, and we realized back in 2017 that the Supreme Court isn't going anywhere. And Congress can't change the laws about money in politics. And so we can't just stick our heads in the sand, but kind of like ESG, but it's not ESG, but the same idea, fundamental idea that if you purchasers in the economy
Mhm.
buy less of a company's goods or services because that company is giving a few $1 million or $10 million or its executives to a party, we think that'll change that company's behavior a lot of times. And
Mhm.
so effectively, some people would say we're weaponizing money in politics in order to fight money in politics.
Hmm. Interesting. Yeah. So what kind of prompted it? As you said, you're a practicing lawyer. Was it just sort of a personal epiphany that brought you to this, or?
Well, kind of, not really. I mean, if anybody started a company before, they know that you learn as you go. We
Yeah.
started out wanting to be an Amazon that was for Democrats. My
Okay.
wife is progressive. And this is my second, the Goods Unitas was my second company. I've now launched 5. So I have the entrepreneur bug is
Hmm.
really part of it. But we did it as really what I said because money overall doesn't drive me. I don't want to just work on a startup just to make money. That was
Hmm.
kind of what I was thinking back in the day. And this was a way to work on a startup that actually could make a difference. And I do fundamentally think that nonprofits are great. And nonprofits like Open Secrets that does some of this is amazing. They're
Hmm.
amazing, but they can't compete with the big gorillas in the room in politics. But a real company can.
Hmm.
And so we've attracted outside capital. We raise money. We launched this app. And eventually in 2020, we pivoted to finance, which is why I'm on your show.
Yeah, I want to get more into that, how it kind of evolved to working with investors too. But just like on a higher level, the money in politics, I mean, I feel like that's always been an issue on some level, but Citizens United really sort of supercharged it. Is that, a kind of piece of where you saw this becoming a real problem you wanted to tackle, or?
Yeah, and my wife, who's the co-founder, is the better spokesman on why money in politics erodes our democracy. I think
Hmm.
most people out there who, think about a lot of political issues have come to a decision in their own mind on this issue. Personally, we both think that money in politics is the root of all of the problems in politics, or at least the vast majority
Hmm.
of them. When you or I can only donate a few $1,000s, but executives can create PACs and donate millions, who do you think the politicians are going to listen to? I mean, it's just, in a capitalistic society, this is what's happening. And
Yeah.
so the only real way to fight back, other than change the law, is to have those executives go, maybe I shouldn't do this.
Hmm.
Maybe I shouldn't donate because it's going to impact my bottom line.
Yeah. And so that's the idea more, is to have them just sort of stop putting money into politics and trying to influence, as opposed to put their money one way or the other.
Correct.
Yeah.
And we are nonpartisan, and that was intentionally decided
Hmm.
a while ago. We do currently only have an ETF that's Democratic, but that is basically because those were the investors we found that wanted to back the product. Trump was in office at the time, so
Hmm.
seemed like the right atmosphere to do it, but we have plans to do a GOP version. The truth of the matter is when Trump lost, I guess,
2020. Yeah.
uh, that happened to be the day we launched our ETF, by the way, which is ironic. Trump approved the Democratic ETF, his SEC, and it was the election day that we got released,
Hmm.
which is kind of funny.
That
But
is.
anyway, right after the election, Republicans flooded into our app because they didn't want to buy stuff from Democratic companies. And then we had the same thing happen this time to a much, much, much larger scale.
Really?
After the second Trump election, finally, Democrats started to realize that, maybe we do need to do something else.
Hmm.
And so we've had 2.5 million users this year of our app, which is 50x,
Wow.
at least 20x what we've been before. And it's all organic through influencers and other, like, we're not paying for advertising or anything. It's just that we've kind of become a movement. People have realized they want to do this, which is great. But it's a little frustrating because it was like banging your head against the wall for 8 years trying to get people to listen. And it took Trump getting elected again before
They really
caught
started
on.
flooding in. Yeah, interesting.
Yeah.
So is the idea kind of like for that company should then be apolitical? And I guess it's hard to
Yeah.
imagine that being possible now, just because it seems like between COVID and George Floyd and, you know, sort of all the social media trends of like people digging into this more, that companies have just become more politicized. And I know that's been a frustration for a lot of executives. So I imagine they would like to get out of that.
I mean, actually, one thing we would like to study, and we've have enough data now, is whether our app being out there impacts companies' giving over time. We've been out there for 8 years now, so that'll be an interesting data point. But the truth of the matter is, no, companies are always going to be political. They're always going to be concerned about what politicians regulate that impacts their business.
Right.
But the difference is, I mean, and my wife would probably disagree with me on this, to be clear, and this is not Good Unitas' opinion, but I personally don't have a problem with lobbying. Lobbying is not giving money directly to politicians to spend on their own campaigns. Lobbying is hire someone who knows the politician and gets you access. That's a lot different. That's a whole nother layer away of influence, in my opinion, than just dumping money in their campaign coffers and letting them go do whatever they want with it to get elected. So, anyway, but I at the end of the day, it's been a really fun project. It's just now paying for itself, or getting
That's great.
close. And so but it's been a battle. You can imagine, like, we had companies send us cease and desists. Big companies don't like the idea of people knowing this stuff.
Right.
But one of the, you asked what they can do. And so I've thought about that a lot. Like because I represent companies. I'm a law firm lawyer. I understand how companies work. And that's, I don't think the answer is ban companies from talking to politicians or anything extreme like that. But I do think that companies actually are allowed to prohibit their executives from contributing. Only government can't do that. A government can't silence its employees from political speech, but a company can, because a company has an interest in its shareholders. And so the courts have generally said a company could do it. So a company could adopt a policy that says our executives can't give more than $5,000, right? Or whatever the average or max is in their state.
Right.
And now a lot of companies would say, oh, we don't feel like we want to impede upon.
Sure.
But you tell the CEO to work at night when he can't be with his kids. Seems like you could probably tell him maybe don't donate if it's going to impact the company.
Yeah.
So
what about the flip side, though? Is there like a concern that all of this could sort of drive the other way, where a company, if you have a CEO or something who's just, a diehard partisan of one way or the other, saying, I want you all to contribute to my party, and they just sort of, use the app to say, we're just going to go for customers that align with us. And
they do, but we fall down on that angle of it's transparency. We are making it easy for people to see the data. That, of course, some people are going to use the data in a way we may not agree with, but overall, giving people easy access to data that is like, we're not making it up. There's no subjectivity here. This is all just data. And so one of them, honestly, I think the fundamental difference, or the service that we're really providing as an app and website, and even the ETF, is that we figure out which companies own which companies, and which companies own which brands, and we aggregate it all together so that when you spend money, you're looking at the overall impact you would have on politics, not just. So, for example, if you go to Open Secrets, and I haven't done this in a while, and you looked up Yum brands, you would see one score, but then if you looked up Taco Bell, you would see another, but they're owned by the same company, right?
Right.
And so we do that, which is also helpful. And then our index align tool, that is just, and now a premium version in the app, that is probably my nerdiest excitement, which is the number one thing that has happened to my wife and I over the years talking to people about this is 1 in 5 get really mad that we're doing this. And they think it's adding to divisiveness in politics, inflaming the fuels. And I've thought about that a lot, and again, we come back to transparency is better. But the ETF and DEMZ in particular, one of the coolest things I've nerded out about is that it has. Well, first of all, let me say what it is.
Yeah, I
So
was
that
going to say, how did just tell a little bit about how you kind of expanded from consumers to the investor side?
Yeah, so in 2020, we were like, uh, frankly, we had 500,000 downloads of the app, which is a lot. We had shown a cost of acquisition of $1, which is super cheap to get somebody, pay marketing to get somebody to download and use an app. But we could figure out how to make money in the apps, unless you have millions of users in there all the time, or they're playing games and seeing ads over and over and over.
Right.
It's so that people who use it like Yelp, they'd go in, they'd look up what they want, and they'd leave, right? And so we couldn't figure out how to make money basically inside the app. And, we didn't have a lot of money. We're a small startup. And so we were just kind of brainstorming, what can we do with this data? And I talked to CSR Hub. I don't know if you know what that is, but
Yeah.
Bahar CSR Hub is I love that guy because I got on a Zoom with him years ago, and he said, he told me what ESG was. And I'm an environmental lawyer, and I'd heard the term ESG, but it was finance, and I didn't know anything about finance. And, he described, and you would probably describe it differently, but he said a lot of companies are taking these environmental, social, and governance rankings and making funds that go on NASDAQ with them. And I was just kind of like, what are these rankings? And so I started asking questions, and basically no offense, my bullshit radar went up really quick when he said outside companies are rating the environmental performance, for example, of publicly traded companies.
Yeah.
Well, I'm an environmental lawyer. I represent big companies all the time, and they have no idea what their overall environmental impact is. So how on earth could a third party possibly do that? Right. And so I was like kind of blown away, but then I was trying to get him to use the political data on his website, but we hung up, and I was like, wait a minute, our political data, the politics of the C-suite says a lot more about the company's values than any outside rating firm saying what the company is doing is ever going to be able to provide.
Yeah.
Like, of course, the other data is important. What they're actually doing is important. But if you know that the C-suite is full of people who've been giving to Trump or vice versa, you have a pretty good idea what the decision-making would be in the company. What do they value? What are they going to do? Are they valuing workers' rights or not? Are they, sourcing from China or not? Like, those kinds of things.
I think you've hit on a real key differentiator in ESG, and this is a huge point of confusion in the space still, I think, because a lot of people, a lot of funds do just what you said, like take this outside third-party data and put these sort of relatively shallow funds together that just use these scores that are black box, and they can, really not correlate with each other. One can look at one company and come up with a dramatically different score than another third party. And so they do kind of just feel like bullshit. And it's just like, based on where they're drawing their data from. And I think the real thoughtful ESG investors are going in and looking at management and strategies and actual performance. And
there's a million things in ESG I've learned that are valuable, of course.
Right. But I'm just saying, that's kind of a little bit, if you want to simplify it, a split of just very let's take the scores and put it together versus let's do some real fundamental analysis and look at the risks and opportunities. And it sounds like what you're saying is this political giving is, as you say, kind of a proxy almost for that more thoughtful approach.
I would say it's a proxy. I think a pretty good proxy. And actually, we ran a statistical analysis with Bahar, and it was Democrat was statistically correlated on E and S, but not G, which was interesting.
Yeah.
So, at least to their ratings.
Right.
So the important part about the data, I guess, that I wanted to make related to ESG is that, and I've thought about this a lot, how do we relate to ESG really?
Mm-hmm.
And the answer is, you can't, in my opinion, put together a fund like that or any analysis of a company doing X issue without considering whether they're spending money on politics to undermine X issue.
Yeah.
So in other words, I have seen, and I could show you, we could get into it if you want. Index Align is a super nerdy, amazing tool that we just came out with that goes all the way to the issue instead of Democrat and Republican like the app. This one goes all the way to 18 issues. And you'll see that most of the funds out there that say they're X the money is going the opposite direction.
Wow. And those 18, are they things like workers' rights, climate, those types of issues?
I don't know if I can screen share, but the point, just to wrap up the ESG comparison, is that you can't say a company is good at climate and then meanwhile, also they're giving money to companies or to politicians who are voting against climate regulation.
Mm-hmm.
You shouldn't be saying they're good at climate if that's also occurring. So I think you need to at least include the data point in your analysis of money in politics. This is Index Align. And so what we realized over the years, my wife and I, is people get really mad about Democrat and Republican. They don't want to think that way. They want to think about the specific issues they care about, which I'm sure you've seen in ESG that, people are focused on diversity or they're focused on X women or whatever, right? And so eventually we realized, well, we could do that if we map the money from the companies, same methodology, 3 federal election cycles, executives and PACs. But then we looked at what are the voting records of the politicians that get that money. And so now we can say, for example, Charles Schwab, I can pull it up on here, gives 40 million over the last 6 election cycles, or 3, and 90% has gone to fight ESG or DEI and has gone to fight LGBTQ plus regulations. So basically we're due these 18 issues I'm showing on the screen. I won't read them all, but some of the highlights: abortion and reproductive rights, defense spending, spending on education, the environment, gun control, expansion of family and Medicare leave. So basically we went through support for Israel. Basically we went through and said, here's the voting records of this group of, it's almost 1,000 politicians we've tracked the money to. So we just map the voting records on 18 and redo it every year. Sometimes we rely on third-party data because some of these issues, there's a nonprofit that has already vetted the voting records annually. But this is the data in here is just insanely detailed. And if you go on screeners, this is just kind of the main screen. You can pick by stock, by politician. You can actually analyze an entire ETF for the data I'm going to show you, which I'll show you in a minute.
Wow.
There's an ad hoc analysis. You can do it by party or by PAC. So the amount of data in here is insane. There's about 2,000 publicly traded tickers we cover. It's only publicly traded stocks in Index Align right now. But if we look at a company, Amazon, so what it's doing is it's pulling all the data I told you about. So we track 30 million in contributions from Amazon's executives and PAC. And that's 7,000 contributions over the data here is the last 3 election cycles, but you can actually do it by election cycle going back to 2016. And you could see where they are in their large cap and like all the finance, sort of breakdowns. But really what's cool is you can see that 96% of that $30 million has gone to politicians who support Israel, or 65% has gone to politicians who support LGBTQ plus rights and union support. And so actually these are, if you're pro-life or pro-choice, you would like Amazon, because 64% is actually pretty high for these data. And so you could scroll down and see that one of the problems with Amazon is we also track dark pack money. Obviously, we don't know what that is, but we can track that it's going to a pack. And so a lot of Amazon's is dark pack. So for those people, for example, who don't like dark pack money, you could create a portfolio that has companies that don't have,
big percentage to dark pack.
Exactly. Yeah. One of the companies people are often surprised about and I referred to is Schwab. So if I show you Schwab, this is surprising, but it's the other way. So Schwab is, a lot of them do support for Israel is almost unanimous across companies. And defense spending, immigration control. So Schwab is 61 million. So Schwab and its executives give more than Amazon. And it's a smaller number, and 93% is fighting unions, for example. Or 92% is against LGBTQ or gun control.
Yeah.
Right?
Yeah, that's a pretty significant swing.
And not surprisingly, it's still heavy Republican, but not even that heavy. Like the Democrats they're giving to are also must be that way. And we do, a little bit of ESG stuff in here, but that's not what we're really trying to do with this. And then if you scroll all the way down, you can see the exact amounts every politician listed. Here we have 397 politicians, or you can look at the PACs, and we track 558 PACs just for this company. So I think you get the idea on the companies, but let me show you the ETFs because I love this. So I'm just going to show you from a different screen because I've got some that are already built up that I've analyzed. But if I had analyzed, this is SPY. So this is the S&P 500 using index align. You can see we track 2.5 billion, literally. We can account for 522,000 contributions and 2.5 billion coming from the executives of the S&P 500 and their PACs. And not surprisingly, 70% almost is fighting the issues, is anti-union, LGBTQ plus, anti-LGBTQ plus, family and medical leave benefits is not great, universal health care, gun control. So basically, obviously you can do what you want with this data. It just says what it says. But and you can see by state, which is not surprising given our country's map. But it also at the bottom, one of the things that's cool about SPY is you can see who are the biggest donors: Tesla, BlackRock, Las Vegas Sands, and Schwab. So there's a lot of really interesting data in here. And to be clear, this isn't expensive. So we're charging $20 a month for the ability to see every company. And then it's $99 a month if you want to be able to do all the other analytical tools, like look at the entire ETFs, look at create your own portfolio, that kind of stuff. But let me look at DEMZ, for example.
Well, just on that for Index Align, are you kind of marketing that to all investors, like individual investors, institutional?
Anybody can go sign up. It's for reporters, individual investors. This data is public. You go to indexalign.com, you sign up, and you're in.
Interesting.
You can do it right now. And so actually what we did is in the app that I talked to you about, which is free, so that's a good price, Goods United, we took 8 of these issues and put them in the companies and made it a premium version for $4 a month. So you can also get thumbs up, thumbs down, or sideways on each on 8 of the main issues of the 18 in the app now.
For all the companies, but it's just 8 of the issues instead of the 18.
Yeah, it's just 8 issues, and it's not the excruciating detail.
Right.
But if you look at DEMZ, what I love about this, and look, we built this tool after we launched DEMZ, so I had no idea what this was going to show.
And DEMZ is DEMZ. It's your ETF, right?
Yeah, that's the Democrat. Oh, sorry. And I don't know if I even, let me say how that's constructed.
Yeah.
So DEMZ is the S&P. Well, I like to call it, I'm not a finance guy, but I like to call it the S&P without the GOP. It's the S&P 500. We only include the ones that give 75% or more to Democrats based on that same criteria I told you about, the Goods United data. And that's about 100 to 120 companies. It changes a little bit. And that's the investable portfolio. And our amazing financial or RIA, Jason Britton at Reflection Asset Management, Yale MBA, not a dummy, came up with how to structure this. And that is basically it tracks the market. It benchmarked to the market quarterly. So it has to get as close to SPY basically as possible. It has to have the same sector similarities. So it has to be 5% on within each sector. It's the diversity rule, I think is what he would call it. But I'm not a finance guy. And you can't have more than 5% at rebalance of any holding. So we're actually underweight of some of the tech holdings. We launched in 2020 and beat the market net of fees at our 5-year anniversary by 7.8%.
Wow.
Which, from a nerd perspective, says that the companies that have Democrats in the C-suite, there's data showing that they outperformed over the last 5 years because that's what we're tracking. That's our filter. And that filter has outperformed. Now, the beta is like, obviously, because it's benchmarked to the S&P, it's coming back.
Right.
So it's slightly variable. It's like 1.08 or something is our data. But, and that's as much finance as I can go into. I don't know much more than that. You have to talk to Jason. But DEMZ on index align is really cool because remember SPY, there was 2.5 billion. So there's 2.3 billion less going to politics from the companies in DEMZ than there is from the S&P 500. Just full stop to both parties. And the breakdown is almost entirely as Democrats would want it to be, which is cool. And you could see it's 78% because it has to be more than 75 for them to be included. And and you could see some of the companies, Google, Microsoft, Meta, but all 47 holdings, it's an ETF. You can go look them up if you're interested.
You think that financial performance piece has more to do with the fact that there's just less donations to politics in general, or that it's the nature of those donations?
Look, I don't know. We back tested the strategy before we launched. Obviously, that's what you do before you launch an ETF. And we had data going back 5 years before we launched and actually published it on the Goods United website back in 2020 that Democrats outperformed in that 5 years too.
Yeah.
The same thing. So I have no idea. But when we did that analysis back in 2020, we looked at 3 groups, and I think it's still available on the website. If somebody wants it, I can send it to them. They just email me. But basically, we looked at Democrat. So do they give 50% or more? So it's not Dems. We said 50% or more to Democrat. We broke up the S&P 500, 50% more to Republicans. And I think it was 55-45. No, it was 50 and 50. We just full on Democrat or Republican. And then we did a no pack. So they didn't give. And that was a small subset of the S&P 500. I think it was like 200 in one group, Republican, and 220 in Democrat, and then like whatever would be left, 80 or something, 70, and doesn't give very much.
Yeah.
And the doesn't give very much kicked the shit out of everybody else.
That was going to be my next question if you had done that. Because I mean, one of the things that I think, particularly with our network, we've got a lot of institutional investors, and people are, I think, appropriately very wary about bringing their politics to those conversations. And so that anything that has anything to do with politics, people say like, oh, I'm not going to touch that, So, but I think, so that's a really interesting finding that regardless of, it's not really one way or the other, but just not giving leads to that.
I think you'd have to ask Jason, Britton, our fund manager. But
Yeah.
I think if we launch a GOP product, we can also beat the market. I think there's my understanding from the smart finance guys I've talked to is there's some benefit from going from 500 down to 40 to 60 holdings that you can kind of do this with. But I don't know. We would see. I definitely in the study we did, Democrat was better than Republican, and no pack was the best.
Interesting. Yeah. This episode is made possible by Metis Global Partners, a global equity solutions provider managing over $5 billion. Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients, including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's metisgp.com, or email info@metisgp.com.
So let me show you the unintended consequences. And I'm not going to pick on anybody in particular. I'll pick on ACVF because it's the Republican fund. And so it's just kind of funny. They launched the same time as DEMZ, almost exactly, like within a day or two. I didn't know anything about them, but they're the American Conservative Values Fund, and they basically take out companies that are too woke but you can see they have 346 holdings out of the 500. So, but the irony is they're claiming to be the American Conservative Values Fund, but their breakdown is actually less conservative or very similar to SPY. So they have SPY is actually more conservative.
Yeah, interesting.
The Conservative Values Fund.
And that's because they're just taking out companies that, like, based on marketing or statements and stuff,
Yeah,
as opposed
exactly.
to...
They just pick which ones they want to take out, and they keep in the Democratic companies that are doing well. So, like, they have some of the top Democratic companies. Microsoft. Let's look at Microsoft in the ACVF fund. You can see that Microsoft gives $36 million and is 70% Democrat, but they're in the Conservative Values Fund. So this is just one example, but it also happens to ESG funds. Look at the Just Fund. Just is Goldman's fund. I've talked to I've talked to them a little bit about this data. So, but and they have a great methodology. I've looked at their methodology, but if a lot of their investors are probably left leaning, and the underlying politics of their fund is pretty right. And so, for example, they have Las Vegas Sands in their holdings. That is literally, there is not an issue. And if you look at the social issues of Las Vegas Sands, they certainly don't match up and wouldn't be in the top ratings of the Just Fund. They're 98.8% against environmental regulation. They're 99% against workforce safety. So this is both sides, and I want to say what I've said to other people. This isn't necessarily. Did I stop sharing?
Yeah.
This isn't necessarily anyone's fault. No one had this data. This data was not available until 9 months ago or whatever.
Yeah.
So, like, it's easy for me to make light of the fact that these things don't seem to align with the fund holding. But frankly, at the time some of these funds were created, there was no, I guess they could have done this, but it would have been a lot of work.
Yeah. And they would be, if I'm understanding correctly, like a sustainability focused fund might look at a company and say, okay, on our sustainability metrics, they don't emit a lot of carbon or whatever, but they're not looking at the political donations. So they don't know that some of that's being undermined. Yeah. Yeah.
Exactly. So or a lot of them have to have one from every sector. So they're picking between a bunch of really bad companies.
Right. And they're just kind of doing the best in class of any sector kind of thing.
Exactly. Right. Yeah. So, there's reasons sometimes, but it's not a great look. And for not very much money, you can incorporate the data now. So, So anyway, that we're hoping, again, just like ESG, the goal here of Goods Unite Us, which is the parent of all of this,
Mhm.
is fighting money in politics. And just like ESG, it's not just shopping. If investors start paying attention to the political spending of companies, you can be damn sure the CEOs of the companies are going to start paying attention.
Yeah.
And that is really what we want. And that's been the most exciting thing I've sort of found about the finance part of this endeavor that we've been on,
Mhm.
is like, oh, I thought shopping would be a best way to beat this, but actually it might be investing, because it's a smaller group of people that need to pay attention. And if that smaller group of people pay attention, the companies have to pay attention.
Yeah. And they own the companies, right? They own big
Yeah,
chunks of
right.
they're literally the owners.
That's true. Well,
Yeah.
that's
Well, it's really interesting because I think, a lot of what we see is a lot of these issues are big systemic issues, and investors might say, like, we know climate risk is going to hurt the value of our overall portfolio in the years to come, and we want these companies to not be contributing to it. But when they go talk to an individual company, they say, like, well, it's not really what can we do? We're just playing within the rules, and if we want to change
yeah.
this, government needs to make those rules. Meanwhile, they're giving money to politicians that
Right.
aren't changing those rules. So
Right. Which honestly is the way that works. I'm
Mhm.
an environmental lawyer. I represent the companies and their job. My job as an environmental lawyer, I'm at a big AmLaw 100 law firm. I've been at 3 of them. Hush Blackwell is the best, the one I'm at now. But basically, these companies their job is to comply with the laws that are written by the politicians.
Yeah.
And they hire the lawyers and they want to comply with the laws that are written by the politicians. They didn't write the laws. And then, of course, they don't want the politicians to put really strenuous things that are going to hurt their shareholders. That's their job, to push back against that. I
Mhm.
understand that. It's just that when the company executives are giving crap
They're
loads of
getting that
money to
money.
the
Yeah.
politician, then things get real weird.
Mhm.
And I don't, the lines get too blurry.
Yeah.
And
Well,
that's,
just that power imbalance is way out of balance.
yeah, right.
Yeah.
Exactly. It's way out of
Yeah.
bounds. And, you know, um, it's been really, really, really refreshing to see some of the more uh political minded folks than me or even my wife, but a lot of like influencers and like people on like Robert Reich 3 days ago in his Substack told people to go to Goods Unite Us.
Oh, wow. Nice.
So like we're getting more mainstream, and that is what excites me the most, because I just think at the end of the day, these companies I mean, ExxonMobil and the oil companies who, like, it's existential, they're still going to keep giving. But
Mhm.
there's a lot of companies in the middle that are giving just because their CEO is having fun or is really political or whatever. That could end. And
Yeah.
that probably should end first. And that's probably what will get cut first if
Mhm.
we can keep, you know,
Yeah. Well,
running
again, I
into
think if investors, particularly really big investors, start to really come to terms, if they're truly long-term investors and they see their own self-interest at risk because of these poor laws that are allowing these companies to externalize these costs, that will then
Yeah.
come back and hurt the investors' portfolios. And whether it's, pensions, they won't be able to pay out to retirees, or endowments that will lose value as we have more climate impacts and all this stuff. They have a lot of power and voice that they can use to push these companies too, I think.
Yeah, one thing my wife would say, which might be a good, I don't know how many more questions you got for me, but one of the sort of like, she would deliver it better than me, but the gist is people always care about a specific issue or two. It's just they have their issue, whatever it is.
Yeah.
And that's great, but people have a hard time realizing that the politicians are the ones who write the laws. And they fight about everything downstream and they focus on everything downstream. But if you really if you really want workers' rights, or you want more charter schools or whatever it is, right?
Mhm.
You got to focus on the people who actually write the laws at the
Mhm.
top, because they're the ones, they can change everything, not necessarily the companies. They're just complying with the laws that are written by the politicians.
Yeah.
And The problem is right now we've got this circle where politicians aren't doing very much and the companies are just paying them.
Right. What about that? Just makes me think of like some of the associations and memberships that these companies have to like Chamber of Commerce and some of these other groups that sometimes do write the laws and put them in the hands of
Yeah.
politicians. Does this track that kind of thing at all?
This doesn't track that, and
Mhm.
that's, another layer of
Yeah.
problem. I
Yeah.
think further down the list, but in between giving directly and lobbying is those weird groups.
Yeah.
But we do track, actually, we do track those groups have PACs. And if
Mhm.
they have PACs and the
That gets
company
picked
gives
up.
to that PAC, a lot of the company giving we track is through PACs,
Yeah.
industry PACs.
That makes
So
sense.
we track that, but we can't fix
Yeah. What
can't fix
about,
everything.
I noticed you also have the political hazards rating or the pH rating. What is
Yeah,
that? How's that
so
fit in?
we haven't I mean, it's a great idea, but they're very labor intensive, and
Mhm.
so and the app blew up because Trump got elected, and so we've been kind of focusing on other things.
Yep.
So, but the pH ratings are political hazard ratings, and they're more in the line of regular ESG. And in other words, my understanding again is ESG was originally intended to measure the risk of a company having, a bad economic outcome from a climate catastrophe, not what is the company's impact on the climate catastrophe. And so we thought we're looking at what is the impact, right?
Mhm.
Of the money, but we're like, well, we could do the former,
Mhm.
or latter, whichever one. And so basically, the pH ratings are that we are measuring the likelihood of a company having an oh shit political moment
Mhm.
that impacts their stock price. And we came out with the ones that are available now about a year ago, before Netflix took it or actually it was right before the election. I think it was last summer. But we came out with a rating saying Netflix has a very high political hazard rating because their executives are very blue, but and they're very vocal about it, and they interact with high profile people on the left, and that's a risk because their viewership is not.
Mm.
And so we look at 5 different factors: who they give to, what's the delta between their consumer base and their giving, who do they associate themselves with, and we give them a rating 0 to 5 that is their pH rating.
Mhm.
What is their political hazard rating? It's a great idea. I would love to continue to be able to do it, but obviously it's labor intensive. We
Mhm.
did it for a few hundred companies about a little over a year ago. We haven't updated them, but they are available through Index Align. And we could do it for any company anytime if somebody, and we've talked to some folks about doing that. But it's a great, it's pretty basic ESG.
Yeah. Does it factor in the sort of the leanings of the customer base, like you're saying with that
Yeah.
Netflix example?
Yeah.
Yeah. Because I think of like the
And
Tesla example too.
we'll look at their SEC filings and say,
Mhm.
okay, how big is the consumer base compared to the rest of their business? So it's a pretty deep dive
Mhm.
analysis on what's the likelihood of having a Bud Light situation, a Netflix situation. I mean, there's been a bunch of them in the last 5 years,
Yeah.
and so that's what those ratings are.
Yeah. Gotcha. Nice. And then I also saw the campaign finance reform score. Is that another
Yeah.
element of this? How's that work?
So that actually we're going to be phasing out because we
Okay.
created that at the beginning because we didn't have the data that went all the way to the issues.
Yeah.
Right. And so what we did was basically kind of do that and create a campaign finance reform score. It's kind of the basis of Index Align originally
Mhm.
was we were like, we want to give more detail on campaign finance reform because that's what we're focused on. So we looked at who are they giving to and what are the voting records of those people they're giving. But we broadened it now in Index Align and we use a different
Gotcha.
methodology. So we're going to actually switch the campaign finance reform score with just an Index Align score because it's the same basic idea.
Yeah. Nice. Gotcha. Awesome. Well, this is so cool to learn more about all this and just really super fascinating stuff. I would love to anything else that you wanted to share that we didn't cover that we should here?
I have a new life shtick that I think might be worth sharing.
Oh yeah. Okay.
So I have I've had a lot of really amazing, some would say lucky things happen to me. Just like, I mean, I'm a partner at a law firm. I have an ETF on NASDAQ. I'm actually going tonight to a legal mentor network event with 150 people in Chicago. And I started the thing with a LinkedIn post, and now there's 5,000 lawyers nationwide in the network.
Hmm.
I've got an AI court system and judge that I've launched. The list goes
Wow.
on of crazy stuff. And it's I've been very reflective about recently about like, why does this keep happening to me? And I was giving this talk in Italy at a Harvard executive education event last June, this recent June.
Hmm.
And this woman, Elizabeth Pajov, who is a science of the mind, mindfulness person, 4 degrees at Harvard, 1 at Stanford, is like putting on this event. She comes up to me and she said at the end of my talk, everything you just said is backed by Buddha and thousands of years of science. And I was like, what are you talking about? And so now we're doing this podcast called Give and Receive. And
Hmm.
my overall point is set aside an hour a day and give your time to other people downstream of you without the intention of getting anything in return. Like, literally, don't ever think about what am I going to get from this person. Just help them however you can help them. And everybody says, oh, I can't help somebody. You can help somebody. Like, just anybody downstream of you, especially professional people, and watch what happens. Do it an hour a day for 6 months. And it's just this huge snowball effect of goodness. You don't know what it's going to come
Wow.
from. You don't know where it is. But I could tell you 10 stories, and I do on some of the podcasts, of literally like one of them is one of the best things that's about to happen to me financially, I can't talk about, but is insane. It all came about because I mentored some guy emailed me and asked if I'd talk to his 14-year-old son because he wanted to go to law school. And I was like, sure. And I did 2 Zooms with him and his 14-year-old. And then I just kind of stayed in touch with this guy. And then 5 years later, it might change my life. And
Wow.
that happens over and over and over. So,
That's so cool. What's the
so
podcast
anyway,
called again?
give and receive,
Give and
not
Receive.
give to receive,
Mhm.
give and receive.
Nice. All right. I'll definitely check that out. That sounds incredible. Nice. That's great, Brian. And all this work is so cool. I'd love to get you back on to keep talking about, see where it all goes in a few months or so. But I like to do a
Thanks
few.
so much.
Yeah, no, absolutely. I like to do a few kind of quick takes to wrap up. So, given all this brands that you're looking at, what do you have a favorite brand?
My favorite thing that I like to point to that always gets people is there's always a lot of progressive liberal people who wear New Balance shoes, and New Balance is really Republican, or has historically been really Republican. No, I'm actually anti-consumerism pretty much altogether. So like, I don't like shopping or any of that stuff.
Nice. I'm with you on
I do
that.
have a favorite ticker though, and
Yeah.
that's DEMZ. I
Yeah.
have shirts, I have hats, and it turns out marketing an ETF is a lot of work and
Yeah.
not easy to do because the SEC says you can't say anything.
Yeah. Yeah, interesting. Well, it's funny actually. Dorian Nunez was just on the show a couple episodes ago, and he was rocking a DEMS hat. So
I
it's a
love
pretty
Dorian.
good.
Dorian's on the
good look.
board of Good Unite Us and he's the reason why I know about you guys. I literally met Dorian and was like, oh my God, you actually know something about finance. Please help me.
Yeah, he's fantastic, and he's one who gives a lot of his time to downstream to people. He's great. How about outside of all this work? You got? I don't know if you have any free time, but what do you like to do if you do get any?
Well, I have an amazing family, wife and 2 kids. Lily is 14 and is into rowing and could whoop me.
Cool.
And my 10-year-old Sal is into golf and those like what do you call them? It's the little skateboards that you use your fingers with, which is awesome.
Oh yeah, flipboards or whatever.
Yeah, flatboard. And at their tech decks.
Okay, nice.
And then in my free time, like oddly, nobody believes it, but I'm a loner and introvert. I was an only child. I love nature. I just like to be like, I'm doing all this cool stuff, but what I really want to do is buy land and conserve it when I die. And I haven't been able to work on that enough, but I love being in nature. Like, put me out in the woods and leave me alone.
Yeah, nice. That's awesome. How about a book, a podcast? You've already mentioned your podcast, which I'm definitely going to check out. But any other resource you'd recommend that you think people would enjoy?
I mean, there's so many resources. I'm a fantasy novel guy. I just go down these rabbit holes and I can't help it. But I think the most recent one I listened to is called Spellmonger, and it's 8,000 page books or something.
Oh my God.
But I love it's audiobooks. But yeah, the one thing, one other thing about me that we haven't talked about at all, which is my main profession, is I'm an energy guy. So energy is my wheelhouse. I teach energy markets to UW-Madison grad students.
Oh, nice.
I get to start that class in a couple of weeks. I love doing that. And most of my law practice has been energy and environmental related. So
yeah.
So I've always been, a tree hugger, but I'm an economist. That makes a really complicated relationship with yourself.
Yeah. Well, that's another I'd love to get you back on and get your take on the energy transition and all the things that are happening.
Oh, yeah. There's some serious money to be made. The quick snippet, natural gas futures and anybody that builds natural gas plants or transmission lines, because the data centers are going to change everything. And it's going to start in the summer of 2026. And then every summer thereafter, it's just going to ramp up. And so the amount of infrastructure that's going to need to be built is astronomical.
Yeah.
People just haven't really conceptualized it yet, I don't think.
Yeah, no, absolutely. We've been talking a lot about it, and it's going to be big, however it plays out. All right. So this is one we asked everybody. I know you're not a finance guy, but given your role working in this, what's your sort of vision for what finance should look like in the future, particularly if we're going to sort of solve these political problems?
Obviously, I think we need to be people need to be considering where they're putting their money and their investments. Like the whole idea that the S&P 500, which is just a random number that was originally created in like the 70s or whatever, to put a wrapper around stocks, that those companies now get to decide and sit on the board of all of these companies I've learned about that recently. I'm not in finance, but as a person who understands incentives, that seems like a terrible idea.
Yeah.
And so, ironically, I've created a Democrat and Republican version of SPY. Maybe I'll be sitting on the board at some time, which I don't think I should be. I think the shareholders should be making these decisions. And so we've got this weird system now where the shareholders have these people in between them, and the people in between them have different incentives. And so it's all kind of got
all kinds of conflicts
in the original idea of, which works really well. Private companies work great and most of the time because there's, shareholders and there's nothing in between and no weirdness, less weirdness.
Nice. And then how about, it sounds like you've done some of this, but what kind of advice would you give to college students or young people looking to, either engage in some of these political issues or some of these sustainability and finance issues?
Spam, spam, spam. Network. Spam random people who do what you want to do, not ones that can hire you, and ask for advice, not a job, over and over. And just keep talking to people and asking for advice. And you will end up making relationships with people, and it will force you to. And then all of a sudden you have relationships with people who do what you want to do. That's how this works. I didn't know that. People used to tell me to network and I would laugh at them. And when I was 25, and it took until I was almost a partner at a law firm and they're like, go get clients. And I'm like, oh, well, how do I do that? So I had to go out and network, and I learned. And then I realized that like MBA students, they know how to network usually, but they still are not doing it enough.
That's a great point. It's great advice. I always struggle with that too, and then ended up managing and building a network. So it's no matter what it's the way to go. Nice. Brian, well, awesome. Thanks again so much for taking the time and sharing this work and all the good work you're doing, and hope to talk again soon.
Yeah, it was wonderful. Thank you so much for having me on, and great questions. And if anybody has any questions, you can always email me at my law firm email address. If you Google me, Brian Potts, they put it everywhere. It'll be a pop-up. It's everything. So you can find me.
Awesome. Sounds great. All right. Well, take care, Brian. This episode has been brought to you by Metis Global Partners. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.